think that's certainly one of the factors that we're assuming does come to pass in terms of the softer dollar. Obviously in short term it probably doesn't mean too much, but they've got a lot of catching up to do as far as their failure to reach their inflation target for most of the past 15 plus years. They're not alone in that, of course, but if they are committing to that, then that means that they should be actually setting policy so that it's equally likely that inflation is 2.5%. As it is 1.5%. And if that's the case, then they really will have to be very aggressive on policy for a long time, and there's no point pricing in tightening, any substantial tightening in policy once the economy is recovering from the virus. So I think that does really chip away at the US dollar. Obviously, in a world of incredibly low interest rates, it's not such a dramatic difference, but we do think the US dollar has at least a few percent further to fall from current levels.
And we do, of course, have to ask you about the Aussie dollar. Is there enough strength currently in commodities and precious metals to keep propping it up in the face of this burgeoning coronavirus crisis there?
Yes, look, a nice pickup on the precious metals as well, because if gold is rallying and gold and silver, if they're in an uptrend, then the Aussie's usually not far behind. It's pretty hard to be bearish Aussie if people are looking at gold. It is actually one of our main exports, and it's moving, probably at the moment, it's moving up above tourism and education, given what's happening with the border. So we've got that support there. If we just plug in fair value estimates based on where commodity prices are at the moment and look at spot iron ore at $118, the cost of production for us Australian miners is closer to $30 a tonne. It's not across the board with commodities, but our fair value estimate at this point is actually more like 77 cents. So there is scope there. A lot of it depends on the state of the US dollar, but the RBA seems pretty resigned to the Aussie holding firm. There's a big turn down in risk sentiment, then obviously the Aussie would go with it. We saw that very spectacularly in March. But if equity markets can hold up and the recovery is on track, particularly in China, then yes, then the uptrend is intact for the Aussie, and we see it at least at 76 cents next year.